Hi, my name is Michael Miller. I'm the Chief Investment Officer of Crucial Partners. We are the investment advisor to the Sacramento Region Community Foundation and have been so in this role for about 15 years. It's a real pleasure to have this opportunity to speak to you today as we live in a very complicated time for investing. And I'm pleased to report that the foundation strategy has delivered really compelling returns this year in a variety of different climates. So, if we talk about what's happening in the world and in capital markets specifically, you can kind of break the first 6 months of this year into two pieces. The first was the piece up until April 2nd, which was the announcement of US tariffs for a variety of countries around the world. Markets then plunged between then and April 8th, and then since then have gone through a pretty remarkable recovery for a variety of reasons, which I think frankly are very hard to explain. So markets are doing what they do, which is to be a little fickle and a little bit complicated and a little hard to understand. And our strategy and the foundation strategy is not built on understanding exactly what markets will do over any specific point in time. We'd rather do things that are positioning your assets at the foundation to compound in positive ways with positive rates of return over time, to do so with less risk than the markets have, so that we can look at portfolio times of stress and basically see not only future returns from value creation, but also protection of the capital in terms of just what it's worth at this moment in time. And we had a really remarkable and frankly surprisingly extreme example of that to start this year, where we focus for a minute just on the endowment portfolio through April 8th, which was that bottom point for the market. Markets were down anywhere from 15 to about 30%, depending on where you looked, with close to 30% losses in these supposedly so-called Magnificent Seven stocks in the United States. But at that same time, so again, 15 to 30% losses for major US indices, the Community Foundation's endowment fund was only down about 4%. And that's because it has non-US investments. It has a variety of different strategies that have basically served as extremely good hedges against some of the volatility and the change that the current administration is essentially imposing on the world. So that's interesting to talk about. But what's even more interesting is what's happened since then, which has been a big recovery. And what we've had happen is the portfolio's ability to protect itself on the way down has positioned it to really rebound strongly on the way back up. And so it's captured the vast majority of the market's recovery since then, and is now up roughly through the end of June, about 8% year to date. The expendable funds, the long term and the medium term and the short term, are in the same league, depending on which of those funds you're looking at. So the longer term fund will have the highest returns, down to the short term fund, which will have lower returns, because that's just the nature of the risk in the portfolio. But the bottom line is that as we look ahead, we're of the view that this will remain complicated. This current administration is quite clear about what their policy priorities are, and they seem to be expanding them as we speak here in July. And so we should be braced for more of the same in terms of just more uncertainty, more complexity, and therefore the foundation strategy of staying very diversified, very disciplined, and also taking advantage of where markets create unusually good opportunities to step in and buy assets at attractive prices is always been our strategy. And it just happens to be, and it's actually nicely working very well at the moment. And so we're really pleased to share that information with you and look forward to sharing future updates as well. So thank you very much.